minutes. Going on, everyone. 65% of the S&P 500 closed down in the red today, and it was a little bit slower than usual, but we do have some exciting things to talk about heading into tomorrow, as Adobe actually had its worst day in 2 years, and some of the hottest stocks in the short term, like Tesla and Google, started to pull back, but we have other stocks that are starting to build some pretty strong momentum. Either way, we have one more day left of the week, so let's make it count.
Yeah, definitely, Mike. It was a pretty crazy day out there today with all the pullbacks going on. The SPY fell off quite a bit, and, Trump actually opened up the market today, ringing the opening bell at the New York Stock Exchange, but I guess it wasn't the best day, right? At the end of the day, down 0.52%. He's probably mad at that, but it was a pretty rough day out there, Mike, and one stock that was obviously down a lot that you already mentioned was Adobe. I thought that this was a pretty striking move that Adobe had to the downside, down 13%. And we can go to the daily chart, and Adobe has been gapping up and down a ton recently. On their last earnings, they kind of started this downwards trend, and now with this next gap down, they're breaking below support. So this is a pretty rough move here with Adobe, and I thought that the funniest part about this was that they actually beat on EPS, they had record revenue, but their guidance just isn't quite there, and the guidance really isn't that far off either. I guess it's just whenever a stock misses guidance, there's always that chance of it falling.
Yeah, and then Deutsche Bank lowered their price target from $650 a share all the way down to $600 a share. And, they also got downgraded by TD Cowen. So that's not necessarily great to see either. Either way, it was the biggest drop for this company in 2 years. And like you said, their earnings weren't like crazy bad. It was mainly the guidance aspect of it. But the key thing to keep in mind with this one is for a potential earnings continuation. As we've seen multiple times throughout Adobe's earnings, like you mentioned, they have some crazy gaps in both directions, and it's not that uncommon to see increased volatility after these gaps. Basically, when you have a stock like Adobe moving in a momentum-filled way, it makes for stronger trends. So as long as you're willing to adapt and flow with them, it could bring like some really good price action. So either way, keep Adobe on the radar. The sentiment's pretty rough with this one, and it's moving in a major way, but it will trend strongly in the short term.
Yeah, and there is a big support coming up that I am watching on Adobe as well, right around this 470 mark where it bounced today. So if you're a scalper out there, maybe make 470 break. It's a nice whole dollar level, and if you're a short-term trader, that could be a pretty good area or a good level to watch. But Mike, I know that while Adobe's been down today, there was a few tech stocks that were down today. Going back to the heat map really quick, it was a pretty bloody day out there overall in the market, especially with tech like Tesla and Google, which ended up falling down a little bit today. So Tesla pulled back. Of course, it fell back under 420. We talked about that yesterday. It was a pretty big level for it to get to in the short term. But for tomorrow, I don't know, Mike. It looks like these stocks are getting a little bit overextended in the short term, and we might see a continuation of this selling pressure here.
Yeah, so Tesla and Google, as we all know, have been powerhouses in the short term, and while these stocks have just been crushing it, you have to expect some pullbacks along the way. For as much as everyone would hope that these stocks just go up every day, obviously it's just not realistic. So there's two key things to keep in mind here. The first thing is that if you are bullish on these companies for the long term, you have to be prepared for dips. That's just the reality of the stock market. The second thing is that these stocks will present short-term opportunities tomorrow and especially throughout early next week because they have so much momentum. They're moving in ways that are stronger than normal. So if you are scalping these stocks, be willing to adapt and flow with the trend changes because they're going to continue to move in a strong way. Either way, Tesla and Google should be stocks on everyone's radar right now because they are some of the hottest stocks in the market and moving like the strongest.
Yeah, and I actually really like Google in the short term because they're right at $200. Like, we keep talking about these crazy psychological levels coming up, and Google is at a major one, Mike, and there's actually over 100,000 shares stacked up at that $200 mark. So shout out to Bookmap here for the X-ray vision. You gotta love it, right? But that's a pretty big stack, so I will be watching that in the short term. If Google can break that, though, over the next couple days, we could see some fun price action come in.
Yeah, like I am a little bit worried about these stocks in the ultra short term, just given how much they are up, and then also given some of the recent price action that we've seen just in the market overall today. There was a decent amount of red, like you said multiple times already, and part of that's just normal and expected. But either way, I definitely am a little bit skeptical in the short term, and I really wouldn't be all too surprised if we saw some more pullbacks, but I'll definitely keep all the levels you mentioned close on watch. But while some of these big tech stocks are pulling back, we have one stock that's coming back from the dead, and that is WBD. So Warner Bros. Discovery actually crushed it today as they popped up by over 15%, and when you look at like a daily chart of this one, it is nasty. Ever since their mega drop from March of 2021, this one fell from like nearly $80 a share all the way down to lows of like we'll call it $6.50 per share. Now they're back to like that $12.50 mark and moving with some decent momentum. Basically what happened today is they announced a restructuring plan where they're going to be splitting off their cable networks from their streaming like units. And that's pretty good, especially for a company that has just been getting demolished over the past couple of years. The main thing to keep in mind with this one is that when it trends, it tends to trend for like multiple days to even weeks at a time, and it has like increasing momentum. It has been running for some time now, which is a slight concern, but just because a stock is like moving in a strong way, that doesn't necessarily mean it like has to end just because it's like getting to that overextended point. Either way, this is a stock that's moving with strong momentum right now, and it's definitely worth one keeping on the radar.
Yeah, and we definitely learned that lesson a lot in the short term, Mike, that they can keep going with Palantir and a few others that have been kind of mind-blowing this year with how much they really keep going up. And with Warner Bros., it is beat down a lot, so I do think that there is more room to the upside. But Warner Bros. Isn't the only company trying to restructure, so to say, right? We've talked about Intel a little bit in the short term, and Intel had a pretty good day today as well, and they're actually moving up as their CEOs were speaking at the 22nd annual Barclays Global Technology Conference, and they're trying to turn Intel around, which is a great sign here. So there were a couple things that ended up going on here. Firstly, they're going to be changing their foundry business, and they even mentioned there could be a possible spin-off of this. So that's a big deal because they're a chip maker, obviously. So if they spin off, they design chips and make them. So if they spin off the foundry business, I don't know, Mike, like we were talking about before we started the video, I don't even know if I'd want to own the normal Intel. I just want the foundry business after that point.
Exactly. Like Intel has been getting crushed, but it's just like another stock that is like really trying to come back from the dead. And, today was a pretty good day. And when you have news that goes along with it, it definitely like gives the stock some potential to, have some decent movement. One thing that I do really like about Intel in the short term is that it is forming like higher lows, which is good to see. We could see recently, just form that low right around that like $19 and you could just say like $20 a share point. And then as you already circled on the chart, we had that prior low right around like you could say like $18 to $19 a share. Either way, this is a good sign to see, and it shows increasing like bullish urgency. And I really don't mind the reward to risk playing this one in a bullish way in the short term, where like a stop loss can be placed just under this like recent low, right around, let's just say like $19.75 per share is like a stop, with profit targets all the way up to 24 to potentially like that 25.50 to 26 area, or even more aggressive depending on how you want to play it. But I really like that reward to risk skew given how overextended it is, the higher low, and the recent news. And I think it's one just like worth keeping on the radar for sure.
Yeah, the setup's definitely there, and that's what I really like about Intel here. There's some good actionable news, and they're trying to really get this business turned around. Remember, Intel has been falling for a while now, for quite a few years. Like, honestly, since like 2020, it peaked up around that 68 to 70 mark and has just been falling ever since, and they've been getting passed by everybody like AMD, NVIDIA. I would even say like Qualcomm at this point. It's kind of hilarious, but it's an interesting company nonetheless. And I will be watching it on this next uptrend here. Just keep in mind, though, that I know that there's a lot of hate with Intel in the short term. Just understand it's more of like a trade, right? We're not necessarily saying like, oh yeah, Intel's gonna just be the next biggest, greatest thing, right? But it is a good actionable trade.
I'm glad their CEO's gone. That's the first step in the right direction. But moving on, there is some interesting news in the market right now where corporate executives are actually selling their stock at the most rapid pace in a while. So basically what we can see by looking at this data here, you'll have to look at the red bars behind the chart of the S&P 500. We can see the ratio of corporate executives selling to buying is at the highest point. While this itself isn't, let's say, necessarily bearish news, it definitely is a sign that, is worth factoring into your overall analysis because, while corporate executives, don't necessarily control the market, they do have key information that oftentimes is not available to the public, and their actions say more than anything else. So either way, just keep this in mind going forward. And again, while it's not the end of the world, it is something that, isn't the best sign ever.
Yeah, and I know that whenever the stock market's falling, Mike, I feel like a lot of retail traders, for example, get pretty freaked out and then they start obviously selling. But I think that this chart is very interesting where as the market's down, there's actually a lot of buyers coming in because it makes sense, right? People want to buy at the dips, and it's just kind of showing that there's a pretty big overextension right now. So I'll definitely keep that in mind as we're going through the next couple of months and the beginning of 2025. Of course, a lot of stocks right now are getting overextended. We could name 50 of them. Palantir, of course, is a very popular one. But I think that it's just important to take a little bit of caution here as these stocks are just so high.
No doubt. There's nothing wrong, especially scaling out of positions that are up so much. But another thing to keep in mind is that a lot of this recent momentum has come from the recent election results. And when we look back at historical data that goes all the way back to 1960, we could see what the average year looks like for the S&P 500 after the election. And we can see that so far, it has been an especially strong instance this time around. But when we look at past data, we can see that it is generally a pretty bullish trend 1 year following the election. It looks like those first 3 months tend to be pretty strong, and then we normally see a slowdown towards that 3.5 to 4 month mark. But, I thought this was pretty interesting, and I'm very glad we brought it up.
Yeah, me too, Mike. I think that whenever Trump actually takes office, it's going to be extremely interesting for the market. But whenever you look at this data, it gives me a lot of confidence for the rest of this year. Of course, every year is going to be different. This is just an average, so keep that in mind. But I will say it's definitely boosting my confidence for the next year. That's for sure. I know a lot of people right now are getting freaked out because stocks are pretty high, but there are a lot of scenarios where these runs can continue for quite a while, and I would not be surprised if it happened, of course, especially if Trump sticks to his plans, right? Now, that's the problem. If he gets in and then the plans start shifting, then we might see something else happen. But overall, I'm pretty happy and confident with it.
Looking at the actual market for tomorrow, Tom, we are seeing some quadruple top action going on with SPY. SPY rejected pretty hard off that 608 area yesterday and today, and this has been a key area of resistance in the short term. What are the key levels and analysis to keep on the radar for tomorrow?
Yeah, that's pretty rough. That was a bad rejection to see today, so I'm going to be a little bit more bearish in the short term here. And of course, guess where the SPY hit today? We've been talking about this level so much the past couple weeks. It was that key 604 mark. So for tomorrow, we're going to be watching 604 very, very closely. If SPY starts to rip below there, then I will become increasingly more bearish. And of course, it's at the low of day today, which is just under 604, like 603.90. Once we break that, I'll be watching for a couple levels like 603.40, which was a decent support from this week, as well as 602.50. Once we get below there, I think the main thing to watch is 601 and 600. That's going to be a major, major psychological level as it starts to test that. But the market's been getting a little bit more bearish. I think that the main thing is to watch the turnover on the tech stocks. If the tech sector keeps turning over, the SPY might start to test that 600 level.
All right, good to know, and I will definitely keep the levels you listed close on the radar because as we've seen in the short term, these key pivotal points that we talk about every day have been proving to be even more important as we go on because we keep seeing multiple retests of the same levels day after day. So I think that says a lot, and I think it's something that everyone should keep on their radar going forward. I am not liking the recent price action with SPY just over the past last week or so. You know, it made that all-time high back last Friday, December 6th, and since that point, it has just been a little bit like weak, relatively speaking. And while yesterday was a great day, you know, it did make a lower high, which isn't necessarily something you want to see, and it does indicate some urgency in just like some selling pressure. So either way, let's continue to adapt and flow with the market, but definitely keep those levels close on watch. And then what's pretty nice, Tom, is that there's not really too much going on the like economic data side of things tomorrow, so we're pretty clear there.
Yeah, we're clear on that, and we're clear actually on the earnings as well. As on Fridays, a lot of the time it's slow with earnings anyways, but there's not even anything on the radar for tomorrow, at least nothing overly important. So definitely definitely don't watch out for the earnings, right? But yeah, Mike, the overall market, we can just focus on this price action, and going back to the heat map again, a lot of the bearish price action, we should say.
All right, well, let's get right into the good stuff then, which are some setups and predictions. A stock that is definitely on my radar is CELH. For those of you who watch our videos often, you know we've been talking about this stock in a bullish way for some time now, and it popped up by over 7% on the day. The stock is moving in a pretty consistent and strong way, which is great to see. It's still overextended to the downside in the grand scheme of things, and it's you know, building just some pretty good price action overall. CELH is definitely still on my bullish radar, and the more pressure it puts on like its high of day, the better and stronger the price action becomes. I'm really liking how the stock is starting to move in a more consistent way, but it's also starting to build momentum as we're seeing, let's say, 7.5% up days now, whereas like let's say like you know, a couple weeks and months ago, it was so much choppier and just like weaker overall.
Yeah, there was a lot of bearish price action recently, and I really do like this better chop to the upside. That downside move yesterday was like pretty concerning, but it came right back today and even broke the high from yesterday. So that definitely shows a lot of strength. I'll keep it on the radar. With my next setup, I'm looking at Google, and I showed this a little bit already, but I'm going to be watching this one in both directions for tomorrow. If we end up breaking below support from today, which is right around 191, I will be watching Google to the downside, but if we end up running and breaking $200, then I'll be watching Google to the upside. That $200 area is major. There was 120,000 shares stacked up there today, so we have to be watching this psychological level and physical level here with the actual seller stack there closely. So I'm going to be watching this on Google, and it's not even necessarily a play for tomorrow, but for the next few days and few weeks, I will be watching for that $200 level to possibly break. If it doesn't happen, like I said, for tomorrow, I might try to play the 190 breakdown.
All right, good to know. And when you have 120,000 shares stacked at a level, that says a lot. So definitely keep that in mind. And if you haven't used Bookmap already, definitely check it out. It'll be that first link in the description in the comments down below. Stocked Up members save, and Bookmap is X-ray vision for the stock market, quite literally. But going on, a stock that is definitely on my radar still is SMH, and it is to the downside. I talked about this one a couple days ago, and it has been mostly chopping around, but I am liking some of the recent bearish price action that we've been seeing with some chip stocks in general. Because of that, SMH is still definitely on my bearish radar, and it's definitely on watch for a potential breakdown. I would like to see more bearish momentum though, and hopefully for the stock to get below that like $240 area, or at least like $240.50. The main thing is I want to see some like actionable movement to the downside where we can start to see some like bearish momentum kick in. But SMH is definitely on my bearish radar in the short term.
Man, whenever you look at this on the daily chart, if it starts to turn over and break that 240 mark that you mentioned, it's going to get pretty brutal in the short term. So I'll definitely be watching that as well. Now with my next play, this is one that's not very popular, but it's making new highs, and this is Kroger. Kroger can actually have decent options moves as well, but with it breaking out to a new all-time high, and it actually just barely squeaked above it today, I'll be watching for some more momentum tomorrow. So this is really like an all-time high continuation move on Kroger. If I see the breakout above the high from today where it quadruple topped as well, if we see a 63.60 break, that'll be the level to watch for. So keep Kroger on the radar. It's not the most popular stock, but it does have some pretty good short-term movement.
All right, sounds good. Well, let's get right into today's momentum plays then. And with the first one, we have Peloton to the downside.
PTON starting to turn over a little bit on the daily chart. If it breaks below key support at $9.30, keep watching it down.
All right, with the next one, we have UAL also to the downside, and this one is starting to get pretty interesting.
It is. So definitely keep your eyes on $95 even. Again, a huge support in the short term. So if that gives out, watch it to the downside.
And then with the last one, we have Coinbase for both directions.
Yeah, Coin's kind of stuck here, but it's pretty close to $300. So if we end up moving under 300, watch Coinbase to the downside. If you want to get a little bit more risky with it, you could try to play the downside move under 308 as well. But to the upside, watch for a breakout up above 325.
All right, sounds good. So we have both levels for Coinbase, and then we have the downside levels with UAL and PTON. Either way, these three stocks are on watch for potential day trades tomorrow. If and only if they break through the levels listed, the stronger and more consistent these stocks move, the better the setups become. These stocks are volatile, so you have to be happy to adjust and flow with the trend changes. Don't get caught holding the bag. That is one of the worst things you could do as a trader. Keep those stop losses tight and, follow the money. But continuing on to today's $747,000 big money trade, we are looking at ticker symbol FMC. So I'm sure this is a company that most people have probably never traded or heard about before, but today basically the big money bought the 55 strike put options that expire on January 16th of 2026 for this one. I know that's pretty far out, but basically FMC has been struggling quite a bit over the past couple years. They're an agricultural sciences company, and it looks like the big money is betting on further decline of this company. I like how these put options are already in the money, and they have a lot of time to them, so they're definitely relatively high quality. There's some major support right around that $50 area, where if that gives out, that'll be a rough sign for this one. After that, there is some support at 40, 42, and 45, but overall, this one's been pretty rough, and the recent price action doesn't really show too many signs of turning around.
Oh my gosh, Mike, this is terrible. And on a daily chart, this looks like one of the biggest dead cat bounces that I've ever witnessed here on a daily. Like if this ends up breaking down below support, that'll be a pretty crazy dead cat bounce that we were seeing there with FMC. But I'm definitely bearish based off of the price action here on FMC as well. I'm a big fan of this big money trade. Of course, leave some room for volatility, of course, as always. But with the way it's breaking down, I could see at least that lower support testing of 50, if not even seeing a true breakdown of it. But very interesting play here, Mike, to the downside. And a lot of times, whenever we see a big move on the daily like this, a lot of people are like, wow, we should actually buy the dip on this one. But whenever you zoom out even further, it just, it looks even worse.
Yeah, and then another thing to keep in mind too is that when you have this much time to the trade, you have to trade in line with that. So it's when you have all the way out to January of 2026, it doesn't matter what this stock does tomorrow, next week, or even next month. It's much more of a broader trend play, and that's true of all big money plays. So either way, this will be one that's definitely worth keeping on the radar going forward. It has moved quite a bit in recent years, and this is definitely a bold trade as well. And we haven't seen too many trades like this, at least in the short term. So I'm pretty excited to see how it does. But before we move on, I want to give a giant shout out to today's member of the day, M. Stoney in the StockedUp trading floor, who had a great post today basically saying, or at least showing some awesome profits and saying, very nice day, walking away before I give it back, getting greedy. Thanks to the whole crew. So awesome job there with NVIDIA and Microsoft. And what I love more than anything else is the discipline. Focusing on not over trading is a very important thing, and it's something that a lot of traders struggle with. So, the fact that you had the discipline to walk away when you, did the right things is great to see. So huge shout out to you, and keep up the great work going forward. But, with everything being said, I am pretty excited for the market tomorrow. Today was a little bit slow, but there's still a lot going on. Of course, Tesla and Google will be worth watching very closely. We do have some interesting price action with WBD, Adobe, and others. And like we covered earlier in today's video, those interesting charts with executive selling, and then, even the SPY seasonality as well. So either way, if you guys are new to the channel, consider obliterating that subscribe button to get our videos recommended to you more often. We always cover the most important news, information, earnings, big money plays, and everything you have to know in around 20 to 25 minutes or less. And when you subscribe, you'll get our videos recommended to you more often. Last but not least, if you have not tried out Bookmap already, I highly recommend it. It's X-ray vision for the stock market, and it shows you, quite literally exactly where buyers and sellers are stacked up. Like Tom mentioned earlier in today's video, when you have over 100,000 shares stacked up to, sell on Google at the $200 price point, it says a lot, and it's actionable information. If you want to try it out, you can save with the StockedUp link in the description and the comments down below. But besides that, thank you all so much for watching, and let's end the week on a great note.